आज की इस वीडियो में हम लोग सॉल्व करेंगे मिडुरिस्ट कंपनी जो सितंबर दिसंबर 2020 अटेम्प्ट में इट हैज बीन asked. So question has a 5 requirement and I think question belong from life cycle costing. So let's read the background first. So Midhurst company manufactures air conditioning unit and is considering an investment in a new unit that will be used in modern office building. So company nature is to manufacture air condition unit and is considering to be invest in the new unit that will be used in the modern office building. Advance in technology mean that this unit is more sensitive to change and variation in temperature. Therefore, it can regulate airflow and heating more efficiently. Midwest company competitor currently do not have an equivalent product that can offer these features. So that's very good point. Midwest company expect to sell 10,000 units over the predicted 5-year life cycle of the unit. So basically, they are considering to invest in the new unit, which considered to be used in the more advanced technology, and also like Midwest competitor do not have such kind of feature like available in their product. So also company is expected to sold out 10,000 units over the life cycle of the product, that is the 5 year. The finance director has prepared the initial costing for the unit as follows. So they have just calculated the cost. The finance director plan to use life cycle costing to use to measure the profitability of a new product. Chief executive has asked for more information about life cycle costing as they are not sure whether it is right method to use, and the production director has reviewed the costing in detail and suggested a couple of changes. They are enthusiastic about the product and believe that modification could be made to prolong the product life, but wonder when the best time would be made to change to the product. So that's fine, that's very small part given in the scenario. Now, first part of the question is asking, according to the life cycle costing method, which two of the following statements regarding the stage of life cycle are true? Okay, so first statement is saying at the introduction stage, further capital expenditure will be needed. Sorry, for as production capacity will need to increase to meet demand. So this is I think somehow true, because obviously in introduction stage we have to like there will be lots of capital expenditure initially be incurred, but let's see from what perspective they are talking regarding this line. We will look into this again, but somehow it is correct, so let's hold for this for now. The maturity stage occur when the market has reached the saturation point and bought enough of the product. So basically saturation point means decline phase. Okay, so not the maturity stage. Okay, so that's why B is wrong. The majority of product life cycle costs are determined by decision which are made at the design and development stage. Obviously, at the initial point, majority of costs are incurred, especially in case of R&D. So we majority of costs are obviously incurred at the initial point regarding design and development. So if we will do design like research and development or whatever design and development cost at initial stage, it will reduce the following future cost as well, because for example we have spent too much time. I also we have incurred too much cost in designing and development stage, so that in future customer will not return the product just because the quality is poor. Obviously we are giving them something like that product which are very good in the quality. So that's why C is correct. Now last, the growth stage when sales have reached their peak and become stable will be the most profitable stage. Okay. So basically, yeah, in growth phase is known as like profit maximization phase, but sales will be stable in the maturity phase, not in the growth phase. So that's why this option is also out. So we have only left with A and C, and in A, I think from what perspective they are talking regarding this, obviously in future demand will increase, and accordingly we need to increase the production capacity. So initially we will decide those things, and there will be capital expenditure incurred in the huge amount at initial point. And I think from that perspective they are talking regarding the production capacity and increase in demand, because obviously इनिशियल लेवल पे हम लोग को सोचना पड़ेगा फ्यूचर में कितना डिमांड होगा, वैसे ही मशीन परचेज करेंगे एंड देयर कैपेसिटी एज वेल. So that's why A and C is correct here. Now B. What is the cost per unit of new air conditioning using the life cycle costing to nearest dollar? So now we need to calculate life cycle cost per unit using the cost provided by the cost detail provided by the question. So let's do the calculation. So here I have done question for you. So basically question was asking to calculate the life cycle cost per unit throughout life cycle to the nearest dollars. And so they have already given the cost details here. So I have just put it out the figure here. And also they have told that they will expected to sell 10,000 units over their product life cycle. So I have just taken the R&D cost because they have taken 30 common. I have not taken the 30 common here. And regarding the variable cost, they have given in the per unit for the 10,000, 42 into 10,000, and again 30 in the common I have taken here. So by adding all these, we will get this much of the total cost, and I will divide this by 10,000 unit because question asks to calculate cost per unit. So that's why 90375, and also question have said to the nearest dollar. So obviously 90735, which option is D. Now question number 3, what the question is saying. The production director has suggested the following change for the cost of new unit. Currently, material costs are 20% of the variable cost per unit. One of the material used is stainless steel, which is budgeted at 2,000 per unit, but an alternative corrosion resistant metal costing 25% less can be used. The production director believes 15% discount can be negotiated for the remainder of the material. So now they have asked us to calculate revised material cost per unit to the nearest whole dollar. See guys, I have told you multiple of time previously as well, whenever you see the blank option, just ask yourself whether in which format examiner is looking for the answer, and here they are looking for the answer in the nearest whole dollar. So here I have done this for you as well. So a question is saying material cost is 20% of the variable cost, and if you look at the variable cost, it is 42 per unit. So for 10,000 unit it will be, sorry, it is 42,000 per unit. For 10,000 we will just multiply 42,000 into 10,000, which I have done here, but we will just take here 42,000 only because we are calculating for per unit, if I am not wrong. See, so that's why if you will take 20% of the variable cost of production per unit, that is 42,000, so it will give you 8,400. Okay, now the question is saying one of the material used is stainless steel, which is budgeted at 2,000 per unit, but alternative is also available, and that will cost 25% less that we are costing right now. So 25, so I will just deduct the first 2,000 because we are replacing this material, so 2,000 cost will be lower. Okay, and the substitute material that we are going already material that we are going to use will cost 25% less. For currently we are costing 2,000 for that material, and now if we will use alternative material, it will cost 25% less. So 25% less means 1,500. So 20,000, sorry, 2,000 into 100 minus 25%. So now alternative will cost 1,500. Okay, so we have just calculated the cost, and also they are saying that production director believes we will get 50% discount by negotiation for the remainder material. So remainder material is 6400 because 8400 was actual material cost, and where we have replaced one material, so remaining material cost was 6400. And if we get 50% discount, so after 50% discount the remaining material cost will be 5400. You can see the formula bar how I have calculated this figure. So the material which we replace will cost 1500, remaining will cost this much. So according to that, revised material cost per unit is 6940. All right. Question number 4. The production director has also asked about implication for the production planning if company wish to extend the product life cycle. Okay, at what stage the life cycle is at what stage of life cycle is a new unit mostly likely to undergo product development? Obviously, at maturity phase. Okay, because after introduction the growth will come, and when the product reaches the maturity phase, then it's time to introduce a new product to extend the product life cycle. Okay, then last one. Chief executive want to brief on advantage of using life cycle costing. Which of the following statement regarding the advantage of life cycle costing are correct? So it draw management attention to all cost related to product which other costing method usually treat as a period cost. Obviously, like in life cycle costing, we used to consider all costs from the development of concept to the withdrawn phase of the product from the market. So there are initially lots of cost has been incurred, like research and development. There will be like cost of there will be lots of cost at the like initial design and development as well. So that's why in other costing method they used to treat this as period cost. However, in the life cycle costing, we consider it as a product cost, and you used to capitalize this in the product cost as well. So that's why it will draw attention of management in the cost, all cost that has been incurred throughout the product life cycle. So it's true. Okay. Now, second one, it focus on measuring the product cost from the concept to withdrawal rather than reviewing cost on period by period basis. Exactly. Other costing system used to only calculate the profit of the product on period by period basis, but in life cycle costing, they will not consider the profit or cost for the one period. In fact, they will consider all cost and income that has been incurred throughout the product life cycle. So obviously, it focus measuring the cost, all cost from the idea of like product being came into the mind and also to the withdrawal from the market. So that's why it's also true somehow. Now, 3. It focuses on what consumers are prepared to pay for the product and establish cost budget based on the expected selling price. So this is basically target costing method which this sentence is explaining. So that's why in life cycle costing we don't consider what consumers are expected to pay. We consider this thing in the target costing. So that's why statement 3 is explaining target costing, not the life cycle costing advantage. Now, fourth, it adds understanding of relationship between design and design stage and the cost of other functions such as marketing. Obviously, there will be lots of cost. They will have a relationship between cost incurred in the different stage. For example, if we will spend more time in inspection at the initial stage as well as design and development, obviously in future warranty cost or customer product return cost will be lower. So obviously somehow the costs are linked to the each stage. So that's why it is also somehow true. So it will help in better understanding the relationship of cost if we will plan or if we will think carefully at the initial stage. Obviously future cost will automatically be reduced, and this is also the advantage of life cycle costing. So 1, 2 and 4 is true. 3 is explaining target costing.